Consequently, the government of Uganda and Parliament approved a corporate income tax waiver for Bujagali Energy Limited for a period of 5 years from 2017-2022. The government of Uganda further committed to extend the corporate income tax waiver for the refinance period of the debt, 15 years. Since July 2022, Parliament has approved annual corporate income tax waiver extensions. The existing corporate income tax waiver for Bujagali Limited expired on 30th June.
Bujagali had 3 classes of shares: Class A, Class B, and Class C. Class A was ordinary shares meant for the other shareholders. Class B was preference shares, and Class C was for government. Class C had no voting right, not even dividend. That was for government. Now, later, after it had started, Bujagali started redeeming preference shares under Class B, a total of $169 million.
What is redeeming? Tell us what is redeeming.
Redeeming is paying back what the shareholder had put in. It's like when you have a loan and you have paid back that loan. Now the question was, if we had a loan and paid back the loan, should your books of accounts reflect that loan still to be within the company? That's one. So the question was, if these preference shares were redeemed and paid back the shareholders, should they be reflected in the accounts? And the answer would be no. Because the double entry would be, you debit the preference shares and credit the payment.
The Auditor General is quite shy. And this is what I'll read on paragraph 8, on page 5 of his report. He's very shy. And this is very dangerous for an Auditor General to be shy with an office of Parliament. It says preference shares. In my view is that the redemption of Class B preference shares, now is accepting they have been redeemed. They have been paid. That's what is confirming, which is my brother Tayebwa has raised. Shares from 2013-2015 amounting to $169,886,000 by Bear shared was permissible. Now permissible, it has been now permitted to remove under the laws of Uganda, and would not require an adjustment of values. How do you negotiate and you don't have an adjustment? I fail to understand which school of accounts the Auditor General goes. Because the moment you remove money, it means you debit the preference shares, you credit cash or bank. It means the money has left. So how does it remain? I wish the Auditor General was here to tell us how it would balance when it has been what? Removed.
On board, I want to bring him on my side, support me as he has always done. Part A explains what happened, what the current law introduced. Part B is the facts from the bill which I have laid. And I go ahead to justify why we need to make these provisions. And part C is the conclusion, all the players, what I'm asking for. So I see no problem with my talking notes. So you can as well refer to them or to Excise Duty, Income Tax Amendment Bill number 1 of 2025. Chair and colleagues, the Bujagali Hydropower Project is a 250 megawatt hydropower facility developed through a build, own, operate, and transfer model on the River Nile. The project was developed with the main objective to provide least cost power generation capacity to eliminate power shortages, plugging the economy during that period and spur economic development. The project has been implemented by Bujagali Energy Limited, a Ugandan registered special purpose company. In December 2007, Bujagali Energy Limited signed a 30-year power purchase agreement with the Uganda Electricity Transmission Company Limited for the sale of electricity generated from the project. Project construction commenced in 2007 and was completed in August 2012. The project was financed by a loan facility from a consortium of lenders led by African Development Bank and International Finance Corporation. The original repayment tenure of the project loan was 11 years and was supposed to be repaid by 2023. However, the short loan repayment tenure front-loaded recovery of debt service obligations resulted in too high generation tariff of Bujagali Hydropower Project, and by extension, high electricity end user tariffs. Consequently, in 2017, Government of Uganda requested the Bujagali Hydropower Project lenders led by African Development Bank and International Finance Corporation to refinance and restructure the project debt and extend the debt repayment period for a further 15 years ending 2032. This was part of the efforts by government of Uganda to lower the end user electricity tariff, improve competitiveness of locally manufactured products, and foster economic development. As a condition precedent to the debt refinancing, the lenders requested and government of Uganda committed to waiver the corporate income tax for Bujagali Hydropower Project. Consequently, the government of Uganda and Parliament approved a corporate income tax waiver for Bujagali Energy Limited for a period of 5 years from 2017 to 2022. The government of Uganda further committed to extend the corporate income tax waiver for the refinance period of the debt, 15 years. Since July 2022, Parliament has approved annual corporate income tax waiver extensions. The existing corporate income tax waiver for Bujagali Limited expired on 30th June 2024. In 2017, the debt refinancing reduced the Bujagali Hydropower plant generation tariff from US cents 13.83 to US cents 10.62. The further waiver of the corporate income tax reduced the tariff of Bujagali Hydropower plant from US cents 10.62 to US cents 8.49 per kilowatt hour. The large proportion of the benefits arising from the debt refinancing of Bujagali Hydropower plant were allocated to the extra large industrial consumer category. Consequently, the electricity tariff for the extra large industrial customer category reduced from US cents 10 per kilowatt hour to US cents 8.3 per kilowatt hour, representing 17% reduction, with US cents 5 per kilowatt hour for off-peak period. Colleagues, during the consideration of the income tax bill in May 2022, Parliament passed the extension of corporate income tax waiver for Bujagali Hydropower plant for 1 year instead of 5 years, pending an investigation by the Committee of Parliament. The Parliament Committee on Bujagali Energy Limited did carry out the investigation on the corporate income tax waiver and produced its report, in which, among others, it recommended that the corporate income tax waiver should not be extended beyond June 2023, and Office of the Auditor General undertakes a forensic audit on the Bujagali Energy Limited corporate income tax waiver. Consequently, in June 2023, Cabinet approved a 1-year extension of the corporate income tax waiver for Bujagali Energy Limited ending June 2024, pending a forensic audit by the Auditor General on the Bujagali Energy Limited tax waiver before further corporate income tax waiver extensions are considered. In June 2024, the Office of the Auditor General finalized the forensic audit. As part of the findings, the Office of the Auditor General noted that corporate income tax waiver extensions reduces the generation tariff and therefore the electricity end user tariff. The Auditor General further noted, not extending the corporate income tax waiver does not affect the economic position of Bujagali Energy Limited because the corporate income tax is recoverable from the electricity tariff through UETCL. I now come to the Income Tax Amendment Bill 2025. The object of the bill, Mr. Cap 338, to exempt the income of the Bujagali Hydropower Project from tax. The Income Tax Act is amended in Section 21(1) by by substituting paragraph AB with the following. AB, the income of the Bujagali Hydropower Project up to June 2025. The justification, Mr. Chair, is when the corporate income tax waiver is not extended, the projected Bujagali Energy Limited generation tariff will increase by 15.5% from US cents 8.31 per unit to US cents 9.60 per unit, and the electricity end user tariff is projected to increase by a weighted average end user tariff from the weighted average of Uganda shillings 459.8 per unit to Uganda shillings 881.7 per unit. In addition, extending the economic position of Bujagali Energy Limited because the corporate income tax is recoverable from electricity tariff through UETCL. In conclusion, Mr. Chair and colleagues, in the circumstances, if the bill is not passed, power prices are going to increase, and this will have an impact on the competitiveness of the locally manufactured products, among others. It is on this basis, therefore, that we propose to have this amendment done as soon as possible. Mr. Chair, you'll also note that the commencement date for this bill is defined under clause 1 that this act shall be deemed to have come into force on 1st July 2024. In other words, we are seeking retrospective application of this bill. I submit for your consideration, Honorable Chair.
Participate in the ad hoc committee that analyzed this tax waiver by Parliament. Mr. Chairman, we did a lot of work, but I'm disappointed by the report of the Auditor General, yet I thought we went the same school. Mr. Chairman, we had many issues we raised, but I'm going to speak about a few. We had computed and found that the tariff computation is based on the total equity. That is equity plus interest. And the equity then was $179 million. Though UETCL had computed based on 176, which was an error. Then you would add the 210 interest to come to 390. But UETCL had $383 million, and it used that to compute the tariff of $5.5 million per month. However, we found out first the interest was subject tax by then, but the Bujagali never paid that tax, and neither URA corrected that tax. And the tax of 30% for $210 million was the tax of $63 million. And this was the tax supposed to be recovered for the period between 2007 and 2012 when the project started. Therefore, whereas the Auditor General and the Grant Thornton agree that this tax is payable, URA should correct it. This tax should have been reduced from the interest from 210 to 147. And it is this 147 that should have been added to the equity of 179. And you come 326 instead of 383 to compute the tariff. Therefore, the tariff should obviously reduce from 5.5 million to a lesser figure. Because the 5.5 million is based on the 383, when actually it should be 326. That's point number one. Point number two, where I'm disappointed. Bujagali had 3 classes of shares: Class A, Class B, and Class C. Class A was ordinary shares meant for the other shareholders. Class B was preference shares, and Class C was for government. Class C had no right to, no voting right, not even dividend. That was for government. Now, later, after it had started, Bujagali started redeeming preference shares under Class B, a total of $169 million.
What is redeeming? Tell us what is redeeming.
Redeeming is paying back what the shareholder had put in. It's like when you have a loan and you have paid back that loan. Now the question was, if you had a loan and paid back the loan, should your books of accounts reflect that loan still to be within the company? That's one. So the question was, if these preference shares were redeemed and paid back the shareholders, should they be reflected in the accounts? And the answer would be no. Because the double entry would be, you debit the preference shares and credit the payment. Now, remember that the tariff was computed based on the preference shares that were in the company. Now we say that after you have redeemed and got back your money, why do you continue computing the tariff based on the old value? Now, the auditor is shy, has not expressed himself over it. Neither, because I read both reports, neither Grant Thornton has actually Grant Thornton has totally dodged it. Look at the recommendations, he has not talked about it. So we are saying that if that preference shares which were redeemed, if that money is removed from the total equity, where you have added your equity plus interest before operation, and you compute the tariff, it will definitely go low. And it would go low according to the number of times you have, the amounts you have removed each year. Because they started removing from 2013 up to 2015, a total of $116 million. So there is no way we should have continued paying that tariff, because the tariff is based on a wrong computation and values. I submit.
Mr. Chairman, just some notes.
Yes, thank you, Honorable Tayebwa. Yes, Honorable Nandala.
Mr. Chairman, I also happen to have been a member of the committee. One, we have rules which govern us as professional accountants, and I'm happy the Minister of Finance is the member. In our rules, one of them, you commit a crime. If you have seen information which even a kid would have seen, and you don't talk about it, you are disciplined. 2 entities here are supposed to be taken to the Institute for Disciplinary. One, Grant Thornton. 2, the Auditor General. Because the Auditor General is quite shy, and this is what I'll read on paragraph 8, on page 5 of his report. He is very shy. And this is very dangerous for an Auditor General to be shared with an office of Parliament. It says preferred shares. In my view is that the redemption of Class B preferred shares, now is accepting they have been redeemed, they have been paid. That's what is confirming, which is my brother Tayebwa has raised. Shares from 2013-2015 amounting to US dollars 169,886,000 by Bear shared was permissible. Now permissible, it has been now permitted to remove under the laws of Uganda, and would not require an adjustment of values. How do you negotiate and you don't have an adjustment? I fail to understand which school of accounts the Auditor General goes. Because the moment you remove money, it means you debit you debit the preferred shares, you credit cash or bank. It means the money has left. So how does it remain? I wish the Auditor General was here to tell us how it would balance when it has been what? Removed. The values of capacity. Furthermore, neither the PPA nor the contains restriction on bearers' corporate powers to issue and or redeem preferred shares. Now the recommendation. If you read the recommendation, the Electricity Regulatory Authority should assess the merits and the demerits.
As we progress, honorable colleagues, issues to do with our officer, the Auditor General, I wanted us to let's put out what belongs to
fine.
them.
That's why number one.
Let me conclude. So that what we observe that we should ask our own officer, then we shall call him in an internal and in-house discussion. I just wanted to guide like that.
Mr. Chairman,
so put out questions that these people can
I think that's okay. No, members have agreed.
That's agreeable.
I have agreed. Maybe the Auditor General never saw the other one. The other point, Mr. Chairman, corporation tax is a result of making profit. You make profit, then you charge corporation what? Tax. And the corporation tax after charging, the remaining is what is for the shareholders in the form of dividends. And the dividends is the return on their investment. What it means is I invested my money, I will continue to invest if I will get dividends which are corresponding to the amount of what I've invested. Our agreement says the return on investment by the shareholders will be 19%. That means for them it became an expense from day one. It even violated the accounting principles. What it meant is that it will be an expense whereby it means it will be up there and you have got your return on investment. The moment you get a return on investment, you are done. How would the government, again, having given you a payment of investment, again you come and say you must make a corporation tax, a profit and charge corporation tax? It means Bujagali is cheating people of Uganda. What it would have done, it would have expenses, add on the return on investment, that total expense will be the one which will be the charge of the what? Of the tariff. But the moment you get a return on investment, then you make a profit, then you pay dividends. It means you are charging us twice. You are getting a return on dividends, which is a return on investment, which will be a dividend, and again you go and get dividends. It means there's double charging people of Uganda by Bujagali. Even a lay person would see it. I have been paid for my investment, I have got it, 19%. Why would I again wait for more money to make a profit? Again, I go and get more. In short, the return on investment of 19 plus the other one which you don't want us. In short, they are overcharging us so that they can make a profit at the end, which they want us to be exempted. Then they also add on the 19%. That is not acceptable. And I think the president has not been told very well. I'm sure Kagwa and the minister have not explained. We want to meet the president and tell him that these people are cheating us in the name of saying they have invested here. They are cheating us, they are getting a return on investment, they are even getting zero tax, then they get more two returns, which is criminal in the whole world. Finally.
Further information.
Yeah, fine.
Maybe the committee needs to know that for the years between 2013 and 2022, Bujagali had paid a dividend of 475,740,974 on an of 179 million, and which investment 169 was removed after 2 years.
Mr. Chairman, I think we have seen it. Even that means 19% return. They also got 419, and they even withdrew the investment, which now they have zero. In fact, we are demanding them from 2012, we are demanding them 63 million, even on our own money, which is supposed to be taxed, they are getting a return, and also using it to generate this. Finally, Mr. Chairman, we Bujagali that for the first time we should come out since they have invited. Yeah, yes.
Actually benefiting from you and Honorable Tayebwa. Just an inquiry from page 5, preference shares. I wanted to find out, after the redemption of Class B preferential shares from 2013-2015 amounting to 169.88 million by bear, did they continue getting the same returns, dividends, as if they had not redeemed the amount? Very treacherous.
Mr. Chairman, you were saying, even if you have raised a good point. In 2013, you raised $1 million on tax, on interest. Now, when they saw it, they withdrew theirs and they left, instead of paying us the 60, they started using even our money, which should have been taxed. And to show you that this one is very bad, the final thing I want to put up, they made 3 classes: Class A, Class B, Class C. And the Class C is for government of Uganda. For them, they said you have 2 things: you don't earn, and you have no voting right. That's even criminal further. Who is this who can make an agreement that the people of Uganda cannot even get a return? If they are not getting a return, then their money should not be used for computing the tariff. They should put it aside, number 1. 2, they should at least have a voting right to say something in this meeting.
Yes, Honorable.
And as I want to say, Mr. Chairman, if the Minister of Finance cannot explain to the President, we are here to tell him. Nobody should be. The people who are running this country, they go to the President and say, no, these people, if I don't do this, I'm going away. Trump has chased the people the government is running. Or even as if the President decides and says, Bujagali off, we'll be here running. Thank you.
Honorable Agnes Appiah.
Thank you very much, and thank you, the Minister and my colleague. Chair, from the Minister's talking notes, the justification on tariffs increase, which has always been an issue, that you raise an alarm that, the power tariffs will increase. I find it in two issues. One, from the submission of my colleagues and also this report of the Auditor General and the ad hoc Committee of Parliament, there is clear evidence that there is an error in the tariff computation. And so, Honorable Minister may have to provide us a clear analysis of how you're reaching to these tariffs based on the facts that we have, that in the computation of these tariffs you're talking about, there is an error. That is one. Chair, the second issue that also came out very clearly here, I think we have a very serious accounting error on some of these issues that we are talking about. And I think this submission from the Minister, in my opinion, is really not sufficient enough for this committee to make any decision on this issue. And so it would be pertinent that the Minister comes back, particularly on this justification, just to say that because tariffs will increase, so we should waiver this tax. I don't think it's really enough, because there are much more facts and evidence which can really kind of shoot down this kind of justification. I thank you.
Yes, Honorable Kanya.
Thank you very much, Chair.
serious moral issue of ethical standard. And I think it's just proper that we escalate this matter to other institutions that deals with the moral and ethical audit standard. Chair, you are being interrupted, and that's why I want to respect the interruption, and I keep quiet.
No, it's okay. Just hold on 1 minute.
Yeah, thank you very much, Mr. Chair.
Yes.
Mr. Chair, my two professional colleagues have raised the issue of moral and ethical standards. And it is just proper that we escalate this matter, because in attached in the Bujagali report here, there's a letter from the IFC, the World Bank, and I know Grant Thomas something, Grant Thompson is a member of an international organization. Mr. Chair, there is the OECD, Organization for Economic Community of Europe and Africa, and then the US. We need to raise the ethical and moral standard of this institution violating global audit standard. We did it some time back, and it helped, because these institutions, when they are down here, they violate the standards. But when we raise this matter and we escalate it to OECD and even to the World Bank independent panel of investigation, the IFC will be brought to order, and even these institutions. Because I think some people have been compromised internally here, and they cannot raise their head. Mr. Chairman, I beg.
Members, just give me 1 minute. I want to have an analysis here and make a ruling going forward. Honorable Minister, before I give my guidance, I wanted to know if you have anything to ask URA to say in this matter.
Mr. Chair, the matters which have been raised by our two colleagues, Honorable Hebert and Honorable Nandala,
but even generally,
and generally, they
yes,
need to be disposed of. And I am not supported enough. In my team, I don't have someone from the Auditor General's office. My prayer is that we be given time. I come along with the Auditor General to respond to the issues which have been raised. And Mr. Chair, if we can do this tomorrow,
now
I'll be grateful.
I'm going to request, the Auditor General is part of Parliament. We are going to ask him to come, but we shall ask you to come along with URA only tomorrow. Honorable members, having agreed on that.
And with Mr. Chair, on procedure, we cannot have Auditor General when the Minister is that side. We need to meet Auditor General without the Minister, because that's our staff. We cannot expose him to the public.
To facilitate the Auditor General so that the report is made. However, I'm just going to clarify by the point I want to emphasize that we must meet the Auditor General. Yes, was it anything to do with? Yes.
Chair, it is in relation to that. But first I should say I'm Honorable Lams. And as we plan to meet whoever we want to meet, Chair, the ad hoc committee that was constituted to handle the issue of Bujagali, as already observed by some of my colleagues, was very elaborate on some of the things that must be done. And at this point, we expect a feedback. For example, there was a recommendation for recovery of $342 million from people who are running Bujagali. We want a feedback on that. there was supposed to be investigation by IGG.
But now, Honorable
Just a moment, because when the minister is going to come, he must give a feedback on the progress they have made with all those issues. Because he cannot just come here, even the report he has brought here is not signed, he's not owning it up. Are we going to proceed like we are running a crowd business?
That one is not a report, it was his talking notes.
Okay, whatever it is, he should own it next time. The IGG was supposed to investigate a 5 million expense through Uganda Electricity Transmission Company. There's no feedback on that. The Auditor General was supposed to audit application of 15 million expense to UETCL. There's no feedback on that. The Ministry of Finance has also been called to account for $2.8 million. All these details are not in this report. Mr. Chair, there is a lot which is being covered, and as the minister plans to come here, there must be a very comprehensive report on actions the government has taken in relation to the report of the committee on this particular matter.
Thank you, Honorable Nguzili. That were raised by the ad hoc committee and debated on the floor of Parliament were referred to the Auditor General, and the report is herein. And all this that we are saying, we are rotating, but it ends into having a meeting with the Auditor General. Having said that, we have deliberately said we are going to meet the Auditor General tomorrow, and the meeting will be at 10 in the morning. Meeting adjourned.